Okay, so there's a common mistake that happens with backdoor Roth IRAs, and it revolves around 408(d)(2) account aggregation rules. These rules state that when taking a distribution from a pre-tax IRA, like a traditional, simple, or SEP IRA, that distribution is treated as having come from a single IRA. So all your pre-tax accounts are combined into one single hypothetical IRA, and that distribution is treated as if it had come from that hypothetical IRA. Now, the reason that this matters is that IRA distributions are part return of basis and part pre-tax. So part of the distribution, if there's any basis in the IRA, which means any amounts you've already paid tax on, part of that's going to come out with any distribution. And another percentage of that distribution is going to come back out as pre-tax amounts that you will have to pay taxes on. So if you're doing a conversion, what's going to happen is they are going to take the amount of your hypothetical IRA that you've already paid tax on, divide that by the entire balance of the IRA. They're basically going to say, what percentage of all your IRA balances is this basis amount, is this non-taxable amount? And they're going to assign that percentage to a non-taxable conversion. The rest is going to be treated as a conversion of pre-tax amounts. So this becomes a big problem with backdoor Roth IRAs because typically we don't want to pay tax twice on our backdoor Roth IRAs. We don't want to make a contribution to a traditional IRA for which we do not take a deduction because we're just going to convert it later. That's how it works. And then do a conversion and pay tax again on the converted amounts. What we want to do is we want to just do the conversion without worrying about paying tax on pre-tax amounts. So if you have pre-tax IRAs laying around, IRAs, simple IRAs, or SEP IRAs, you want to be very careful doing backdoor Roth IRAs. There is one very common way to avoid this, and that is to take your pre-tax accounts and roll them into a 401k. 401ks are exempt from this rule, which is fantastic because if you want to do a backdoor Roth IRA, what you can do is you can take your IRAs, your simple IRAs, your SEP IRAs, roll them into your 401k, assuming that your plan allows for that, and then do backdoor Roth IRAs. If you have a solo 401k, this could work for that as well. Otherwise, you are going to be converting a portion of your pre-tax amounts every time you do a backdoor Roth IRA. The most common times that I see this happen is an employer, a self-employed individual perhaps who has employees, and they set up a simple IRA and they're making a lot of money. So they also want to do backdoor Roth IRAs. They're making a lot of money, so they can't do regular IRAs. And so what ends up happening is they make a contribution, a non-deductible contribution to a traditional IRA, convert it to a Roth IRA, and then most of the conversion ends up being taxable because they have this simple IRA hanging out and they didn't know the rules. To put an example around this, let's say you have a $99,000 simple IRA. You make a $1,000 non-deductible contribution to an IRA and convert that to a Roth IRA. Well, what's going to happen is the IRS is going to say that 99% of that conversion was taxable because if you take all of your IRAs, the percentage of your IRAs that are after tax basis, the $1,000 contribution that you made that you didn't take a deduction for, is only 1% of all of your IRA balances. And then the other 99% is pre-tax contributions or earnings. And so those amounts are going to be taxable in the conversion. And so you might be thinking, I didn't take a tax deduction. Why do I need to pay taxes on this conversion? The reason is because you're right, you didn't take a tax deduction, but you have this simple IRA, and the IRS is treating this conversion as a distribution from all of your IRAs. So I hope that this helps you to avoid this very common issue. Again, rolling funds into a 401k or a solo 401k is an excellent way to avoid this complication. My name is Eric Googe. I'm a chartered financial analyst and certified financial planner and the owner of UVest Advisory. Let me know what you think in the comments. I'd be happy to hear from you, especially if you've run into this issue. Let me know what you think.